Hey guys, good afternoon. It is 1 p.m., just after 1 p.m. New York time on Thursday, June 15th. I hope everybody's doing great, having a great week. And I want to do a video today. I hope this is of interest, and this is to discuss the correlation, or more specifically, inverse correlation between the US dollar and stock futures, and how that can help you in both trading stock futures if you choose to, and Forex. Okay, so if you're a Forex trader, you should pay attention to this too, even if you don't trade these stock index futures such as the S&P or ES or the NQ, which is the NASDAQ, or the Dow futures, or any of basically the big three stock futures. Okay, so first of all, I did a little internet search, and I just typed in correlation between stocks and US dollar trading. I mean, I didn't know what to use. And this is some of the initial search that came up. And these first three right here basically talk about, I'm not going to open them. I mean, you could do the search and probably find these exact same articles. And so these first three talk about the fact that in most cases, if the dollar is strong, the stock market will also rally. Okay, so that means a positive correlation. Okay, if something is positively correlated, that means when one goes up, the other one goes up, or one moves in one direction, the other one will move in the same direction. Okay, as opposed to a negative or an inverse correlation, meaning if one goes up, the other one goes down. Okay. So if you read these three, you're going to get the impression that the correlation is positive, meaning they both move in the same direction. And look, let me just also say right up front that, neither of these rules going to work all the time. Okay, there's going to be times when they are positively correlated. The point I'm going to make here is that for the most part, this is garbage, and that they move in inverse correlation most of the time. And I'm going to show you on the chart how you can see that and how that might be able to help you in trading. Again, whether you're trading those index futures or whether you're trading Forex or both. But if you're paying attention to the U.S. economy and stock market and U.S. Forex pairs, this is going to be helpful. Okay? So again, you can Google this and you can find articles in here and read what their justification is. But I'm going to call BS on a lot of that. And from a fundamental standpoint, if you think about it, it makes sense why they should be inversely correlated. Because if the dollar is rising, okay, then there's going to be a lot of interest in people putting money into the U.S. dollar, as an investment, right? Because they're going to get better returns. It's probably a little bit more consistent, safer than investing in stocks. So if the dollar goes up, it's probably going to drain investment money out of the stock market, so therefore the stock market will go down. The other thing is, a second correlation or reason for that might be because if the dollar is strong, then there's a chance that the Fed is going to want to raise interest rates, which we've been seeing over the last couple of years. And so if the Fed raises interest rates, that makes borrowing costs for companies more expensive. So if they want to try to grow and expand their businesses and they need to borrow money to do so, it's going to cost them more money. So that could take away from their value. And lastly, since we're talking about U.S. companies, many of which, probably most of which sell, to other countries, to people and businesses in other countries, if our currency is really strong, it's going to make our products unusually expensive versus the other country's currency. Okay, so if the U.S. dollar is strong and you're trying to sell products to a country in Europe, it's going to make our products more expensive because our dollar is worth more. So it's going to take more of their currency to buy the product. Okay, so for all those reasons, that's why we usually see these inverse correlations. Again, it's not 100%, but you can easily see it on a chart. Okay. Now I scrolled down here in this, and then this was an article, which again I'm not going to read it to you, but this was from October 2020. Stock market zigging while the U.S. dollar zags, and you can just see in the preview here inverse correlation between the currency and the S&P 500. In this snapshot in time, they were seeing that, and I argue that this is usually happening more times than it's not, versus what these articles talk about, that they're positively correlated. Okay, so I'd be very careful with positive correlation. And you can go back and, like I said, you don't have to take my word for it. I'm going to show you on the chart, anyways. And so let's do that. So this is my TradingView account, and what you're seeing on here is this chart up here, these green and red candles, is the ES, which is the S&P 500 futures. And you can put the regular S&P 500 up here. It doesn't matter. I just like the futures because the candles are a little bit more consistent. But it doesn't matter. This happens to be a 15-minute chart, but you can do this on any time frame and see this. And then down below is the DXY, which is just the dollar index. Okay. And I also added this indicator. This is a Lux Algo indicator that I found on TradingView, but there's a bunch of them. It's just a session indicator. So I hid the New York, Tokyo sessions. The London and Tokyo and Sydney. I only wanted to see New York. So basically, these boxes are from 8 a.m. New York time until the end of the New York session. So this is basically the Forex session right here. Okay. So then this time in between is obviously the overnight session for the DXY and the S&P. So this is from about 5 p.m. New York time until 8 a.m. the next day. Okay, so we have the New York session and the overnight session. Okay, and this is all based on New York City time. All right, and so even just looking at this chart, let's go out to the daily chart, okay? And just for a minute, I'm going to hide this indicator, okay? And you can just see pretty clearly, the inverse correlation. Let's just start right here. Here's the ES going up. During that same time, the dollar is going down. Here's the dollar going up. The ES is going down. Lately, from about here, we've seen the U.S. dollar start to go down. The ES has been going up. Okay. Now there is some positive correlation right here. Okay, we have the ES going up and the dollar going up, but now the inverse correlation is coming back in. So that's why I'm saying it's not always going to line up, but in more cases than not, it's going to. All right, here's the dollar going down. Here's the ES going up. Here's the ES going up, dollar going down. Okay, then you have this big area right here. Okay, we have the ES going down and the dollar going up. Okay, so, and like I said, you can do this on pretty much any time frame. This is the daily. I was just showing you the 15-minute. We can go to a 30-minute. Here's a 30-minute chart. You can pretty much see the same thing. Okay, so what I like to do is look at this every morning. And if you really want to try to just hone down which currency pairs you're trading, let's say, especially if you're in the U.S. and you're struggling because, there's dozens and dozens of Forex pairs to trade. Some are better than others. But what I like to do sometimes is just look at only U.S. dollar pairs. And then, but this is where I'll start. So I'll mark out, let me turn the indicator back on. So what I'll do is I'll come to the charts in the morning, maybe 7 a.m., 8 a.m., and this box will start to draw, and I'll draw in levels, and you can see I have this horizontal line marking out these levels on the 30-minute chart, and I can look to see what it did during the overnight, and you can see it's definitely respecting this level right here. Then the New York market opens, Forex market, and you can see we immediately start to trend down. Now, I like to generally ignore the first 30 to 60 minutes of the Forex market, that first, say 8 a.m. to 9 a.m., or at least the first half hour. So between, 8 to 9, or at least 8 to 8:30, I like to just basically watch and see what happens. So this is the 8:30 candle, and you can see it broke structure. And from here, even if you wanted to just go right from here, you can see we had this move down, and that's it. So you can see we're trending down. We were respecting this area. We had the overnight session reversing what happened most of the day in the previous day, continued on during the overnight hours, and then we had this great setup. And then we come up here to the S&P chart, and you can see right here on the S&P chart, this perfect zone right here, right? Again, inversely correlated. It was going down during the overnight here, going up here. We had this, the previous day we had this big push up, and we came down, retraced, swept a bunch of liquidity right here, and you can go to an even shorter time frame and see this, but you can see it fine on this 30-minute chart. We came right back into this zone, and then boom, price shot right up, and you could have just been sitting in this trade, you know, and still been in it right now, okay? So this was at, you know, 8:30 a.m. Now, if we flip over to the Forex chart, and let's just look at the euro dollar. So this is the 1 hour euro dollar chart. This line I already put on here, this was actually the bottom. Unfortunately for me, this happened at 1 o'clock this morning, where the US dollar on this euro dollar chart bottomed out right here and then shot up, okay? That's this vertical line right here, okay? This is 8 o'clock on my broker platform, but that's 1 a.m. my time, okay? So if we go to where the New York Open is, okay, it's 1500 on my, let me go to the 30-minute chart. Here's the 30-minute chart, okay? So 1530 would be the, right here. So at the close of this candle right here is 8:30 a.m. You know, we cleared this structure right here, so I would have been very comfortable entering right here, okay? If I didn't want to enter back here. Now, I mean, theoretically, I could have entered back here. This is right at the New York Open, and I basically could have, because you can see this structure being honored from the overnight session, and from this breakout at during the overnight session, we came right back, swept the liquidity. So you technically could have gone long, you know, right here. But let's say you wanted to wait till the New York session, give that little bit of confirmation time. Well, right here at the close of this candle would have been your entry. And again, you can even go to a shorter time frame, fine-tune this entry even more. And, you know, again, you technically maybe even could have gone right here, although this didn't really break this high. It kind of met it, and then we went up the next one. Okay? So depending where you got in, you could have made anywhere from, you know, 128 pips to, you know, 77 or so pips just today. Just, and this is only a 15-minute chart. And that's basically the full range of the euro dollar during the day. Anyways, you can see it has an average daily range of 74 pips. Okay? So, and this would have been like shooting fish in a barrel, because honestly, you could go to any dollar pair and seen this. Here's the pound dollar, almost looks exactly the same to the euro dollar. That's the 1 hour chart. If you want to look at the opposite, go to the dollar Canadian. Here's that high made during the overnight session right at the beginning, and then straight down, okay, because again, this is a dollar lead pair. Okay, the dollar yen right here, here was that initial breakout to the downside. The dollar yen move down has not been as aggressive, and that's because the yen is still fairly weak, so you have two weak currencies, so the momentum's a little bit slower. So this one would not have been ideal just for that reason, although it's still not a bad little move. Here's the Aussie dollar. Again, here's that session on the Aussie. Here's the Kiwi dollar, session on right there, you know, right in this area. Okay, so they all look pretty much the same. All right? And so it's a great little correlation, and it helps you kind of focus a little bit. Again, especially if you're a USD trader, where these can help you. Now, if I wanted to trade the S&P, I could have traded this, you know, this move. If I only just wanted to use this as some confirmation against the dollar index, but I don't trade the S&P and I only trade Forex, then fine, then I could do that and then come to my Forex charts. Or the other way around. Maybe I don't trade Forex and I only trade the S&P, or I only trade the NASDAQ, because I could overlay the NASDAQ futures or the Dow futures on here, and they look pretty much the same. The S&P is a little cleaner, but the other two basically show the same thing. Okay, so whether you trade, again, the futures or the Forex or both, this is a really great way to round this out. Now, I suppose if you don't trade Forex, if you only trade futures, then maybe you don't need this. You don't need the Forex charts, but maybe you do, because this is a nice little confirmation. You can see where the levels are on the Forex charts, and that can help you, again, with some confirmation about, hey, we're in a good area here. We respected this structure. Price came down, broke out, swept the liquidity, and went. And this is where you're seeing it around the start of the New York session. And this is a great area to get into the trade. Okay. Remember the New York, the North American session for the futures markets don't start till 9:30. So it's an hour and a half later. Now you don't want to wait that long. If the setup is there at the start of the Forex session, around 8 a.m., which is still technically the overnight session in the futures market, if the setup's there, I would take it. Because if you wait until, well into the Forex session, you're going to miss a lot of this. So, and this is a pretty low risk trade. I mean, you could have gone long here, just put your stop right here. You know what? If you're wrong and it turns down, you get stopped out, it's a pretty small loss. Okay? Practice good risk management as always. All right? So I just wanted to kind of point this out that, this can help you really, again, focus your attention, and you can really start to be educated on how these things correlate to each other. When you look at them in a vacuum, you're not going to notice it until you start overlaying charts here. Now, I could also overlay, the euro dollar onto this, chart. You can have 3 of these compared, but all you're going to see if I put the euro dollar on here, you're just going to see the mirror opposite of this dollar index chart. It's not going to really tell you anything more because it's just going to be the exact opposite. It'll just confirm what you already can see here. So, but you could, if you wanted to see all 3 of them on the chart, you could do that. Let me add the euro dollar and change these to candles from line. Okay, so there's your euro dollar chart, and you can see they're just exactly opposite, right? Here's that move down, move up, move down, move up, move down, move up. You get the picture. Sideways, sideways, right? So you don't really need to put that on here, but if you wanted to overlay all 3 of them, in order to give you a view of all 3 of them on one chart, if you have Trading View, you could do this. Okay, so that's it, guys. I just wanted to put that out there as, again, for those of you that trade these futures, or trade the Forex market, especially U.S. dollar pairs. If you're looking at a way to, 1, get extra confirmation about your trade idea and whether there is even a setup that day. 2, have extra confirmation. And 3, remember that you can do this really on any time frame. So whether you're a day trader or swing trader, these correlations pretty much play out. As always, though, they're not always 100%. And also, as always, the higher you go up on time frame, the more reliable the signals will be. Okay, looking at these correlations on a 5-minute, it's not going to be as may not be as reliable as looking at them on an hourly or 4-hour chart, but you certainly can do it depending what your time frame is to trade in. Whereas if you don't have a lot of time, you could look at these on a 4-hour or daily chart and just trade it based on that. And just if you're willing to hold your trades intraday. So. All right, so I hope that makes sense, guys. If you have any questions, comments, just go ahead and leave them down below. To do these comparisons on the same chart, you do have to have a platform like TradingView. This is the pro version. I don't know if you can overlay these on the free version of TradingView. I'm not sure. But this is a paid version. Unfortunately, you can't do this on MetaTrader. What you could do on MetaTrader, if you only have MetaTrader, which is free, is you could... you could do this thing where you put multiple charts next to each other, and you could just, bring up the 2 charts that you want. If you have a Forex broker that has the index futures built in, you could just bring up 2 charts and put them next to each other. You could, minimize all these other ones, but that's not ideal. It's preferable just to see them nice and easy on one chart, and allows you to just look vertically up and down here and just see how they all line up. So, and they will be self-fulfilling because, if there's a setup, there's going to be a setup on both. If there's no setup, the price is moving sideways, it's not clear, then there's not going to be a setup on either one. So that's why it's a nice confirmation. All right, so I'm going to leave it there, guys. Questions, comments, please leave them down below. Smash that like button. Appreciate it. And subscribe to the channel if you're just finding the video for the first time, finding the channel for the first time. And I appreciate it. And I will talk to you all very soon. All right, take care. Thanks.